Imagine you're standing at the edge of a diving board, looking down at the shimmering water below. There's that thrill of excitement, a tingle of nerves. It's the perfect blend of risk and reward. Now think about investing as standing on that same diving board. The water's depth can be uncertain, but the chance of a rewarding splash is what lures us in. Today, we're diving into the world of risk and reward in investing, unraveling the delicate dance between them. Let's start by pondering this. Have you ever felt a thrill when buying something you wanted on sale? Now translate that feeling to investing. It's that same rush when you spot an opportunity in the market, shares of a company at a lower price perhaps. But just like any sale item that might have a hidden flaw, an investment carries the risk that things might not go as planned. Risk, at its core, is about uncertainty. It's the unknown future of whether our investments will sink or soar. Reward, on the other hand, is the potential gain we chase. It's the profit, the increase in value, the sweet spot of our financial journey. The challenge is balancing these two forces. It's about finding your own comfort zone on that diving board. In the world of investing, risk and reward are closely linked, like two sides of the same coin. Higher potential returns often come with higher risks. Consider stocks versus savings accounts. Stocks fluctuate more, offering a chance at higher returns, but savings accounts offer stability with lower returns. It's a trade-off, much like choosing between a wild roller coaster and a gentle merry-go-round. Let me share a story from my early days as an investor. I remember hearing about a tech startup that everyone was buzzing about. It was like a wildfire catching attention, promising groundbreaking innovation. Caught up in the noise, I invested, hoping for a big payoff. But I neglected to consider the downside. The startup stumbled, and my investment took a hit. It was a humbling lesson in understanding risk, not just the dream of reward, but the reality of potential loss. There's a mental model I often use, the marshmallow test. Imagine you're given one marshmallow now or two if you wait. Investing is similar. Do you go for the quick gain or hold out for potentially greater rewards down the line? Emotions play a big role here. Fear can push us to play it safe, while greed might tempt us to chase too much, too soon. Striking a balance is crucial. The legendary investor Warren Buffett famously said, "Risk comes from not knowing what you're doing." Knowledge and patience are your best allies. Research, understand the companies, markets, or funds you're investing in. And remember, time is your friend in investing. The longer you're in it, the more you can potentially ride out market volatility and let your investments grow. It's also essential to know yourself. What's your risk tolerance? Some people sleep peacefully with volatile stocks in their portfolio, while others prefer the steady hum of bonds or index funds. Understanding your own comfort level helps you make decisions that align with your long-term goals. Fear and greed are powerful motivators. They can cloud judgment, push us to sell in a panic, or buy into hype. But staying grounded, keeping your focus on the long term, and respecting both risk and reward can help you navigate the market's ups and downs. So as you stand on that diving board of investing, take a deep breath, look at the water, assess the risks, and imagine the exhilaration of that potential splash. Remember, the aim isn't just to jump, but to jump with awareness and clarity. Reflect on this. The journey of investing isn't a sprint, it's a marathon. It's about cultivating patience and discipline, about learning when to dive deep and when to step back and evaluate. As you continue your journey, let the dance of risk and reward guide you, not just toward financial gains, but toward a richer understanding of your relationship with money.